happens if the dollar loses power? For decades, one currency has held a position, unlike any other in the world, the United States dollar. Whether you're buying crude oil in the Middle East, importing electronics into Nigeria, paying for goods from China, or saving money in many parts of the world, chances are the dollar plays a role somewhere along the line. It's more than just America's currency. It has become the world's most influential currency. But in recent years, a question that was once discussed only by economists has begun making its way into everyday conversation. What happens if the dollar loses its power? Would global trade collapse? Would countries abandon the dollar overnight? Would your savings become worthless? Or is this simply another economic myth amplified by headlines and social media? The reality, as always, is far more complex. To understand what could happen if the dollar loses power, we first need to understand why it became so powerful in the first place. The dollar wasn't always the world's dominant currency. Before the Second World War, the British pound was one of the most widely used currencies in international trade. But after the war, the United States emerged as the world's largest economy, with enormous industrial capacity, significant gold reserves, and growing global influence. In 1944, representatives from dozens of countries met in Bretton Woods, New Hampshire, to design a new international financial system. The agreement placed the US dollar at the center of global finance. Although the system has changed over the decades, the dollar has remained the world's primary reserve currency. Today, banks around the world hold large amounts of dollars as part of their foreign exchange reserves. Many international commodities, crude oil, commonly priced and traded in dollars. Businesses use it for cross-border transactions. Governments borrow in it. Investors seek it during periods of uncertainty. This widespread trust gives the dollar extraordinary influence. But why are people now asking whether that influence could decline? Several factors have contributed to the conversation. Some countries are trying to reduce their dependence on the dollar by trading in their own currencies. Advances in digital payment systems have made international transactions easier. Regional economic alliances are exploring alternative settlement systems, and geopolitical tensions have encouraged some governments to diversify their financial relationships. None of these developments means the dollar is about to disappear. But they do raise important questions about how the global financial system may evolve over time. So what would actually happen if the dollar gradually became less dominant? The first impact would likely be felt in international trade. Today, many businesses around the world use dollars, even when neither buyer nor seller is American. If more countries begin trading in local currencies instead, businesses may need to manage multiple exchange rates, different payment systems, and additional financial risks. For imports, countries like Nigeria, the effects could be significant. Many imported goods, stationery, pharmaceuticals, industrial equipment, and some food products, are purchased using foreign currencies, often the dollar. If international trade shifts toward multiple currencies, businesses may need to hold different foreign exchange reserves depending on where they buy their products. This could create new opportunities, ease of new complexities. Another important area is oil. For decades, global oil transactions have largely been conducted in dollars. If major oil producers and buyers increasingly choose other currencies for settlement, global energy markets could gradually become more diversified. That wouldn't necessarily reduce demand for oil, but it could reduce exclusive dependence on one currency for pricing and payments. Financial markets would also feel the impact. The dollar has traditionally been viewed as a safe haven asset during times of global uncertainty. If confidence became more evenly distributed across several major currencies, investors might diversify their portfolios more broadly. Instead of relying primarily on one reserve currency, countries could increase holdings in euros, yen, pounds, yuan, or other internationally traded currencies. For developing economies, including many African countries, the outcome will depend largely on domestic economic policies. A weaker dollar would not automatically strengthen local currencies. Exchange rates are influenced by many factors, including inflation, interest rates, productivity, export performance, and investor confidence. In other words, the strength of a country's currency depends not only on what happens abroad, but also on what happens at home. This is particularly important for Nigeria. The value of the naira is shaped by factors such as oil exports, foreign investment, government policies, foreign exchange supply, and domestic economic conditions. Even if the dollar became slightly less dominant globally, Nigeria would still need strong institutions, diversified exports, and sound economic management to achieve long-term currency stability. Technology is also changing the conversation. Digital payment platforms now allow businesses to settle transactions more efficiently across borders. Some central banks are exploring central bank digital currencies, or CBDCs. While these innovations may improve payment systems, most economists believe they are unlikely to replace traditional reserve currencies on their own. Trust remains one of the most valuable assets in global finance. And trust is built over decades through economic stability, transparent institutions, and predictable policies. Perhaps the biggest misconception is that the dollar could suddenly lose its global status overnight. History suggests otherwise. Major changes in international finance usually happen gradually. The transition from the British pound to the US dollar took many years, not months. If the global monetary system evolves again, it is likely to be a slow process involving several currencies rather than one dramatic replacement. Some analysts even argue that the future may be multipolar. Instead of one dominant global currency, international trade could increasingly rely on a combination of currencies depending on the region, industry, and trading partners involved. Whether that future arrives remains uncertain. But one thing is clear: the conversation is not really about the collapse of the dollar. It's about how the global economy continues to change. Trade relationships are evolving. Technology is transforming payments. New economic powers are emerging. And countries are constantly reassessing how they manage risk in an increasingly interconnected world. So what happens if the dollar loses power? The answer is not financial chaos, nor is it the end of the global economy. A gradual decline in the dollar's dominance could reshape international trade, investment, and finance, but it would likely unfold over many years, giving governments, businesses, and financial institutions time to adapt. For individuals, the lesson is simple. Economic headlines can sound dramatic, but understanding the forces behind those headlines is far more valuable than reacting to fear. Because in today's world, knowledge may be one of the strongest currencies of all. Now we'd like to hear from you. Do you think the US dollar will remain the world's dominant currency for decades to come? Or are we moving toward a future where several major currencies share global influence. Share your thoughts in the comments. If you found this explainer helpful, don't forget to like, subscribe, and turn on notifications. Because behind every major economic headline is a bigger story. And here, we explain it in a way everyone can understand. This is V, Unfiltered. See you in the next video.